Hello guys, welcome to the Trading Parrot. I'm gonna record a short summary for my members. You can watch this in the mornings, but in the evenings it's gonna go also public for free for everybody. And let's start with the 4 hour, because after this breakout that we had on Friday and reaching a price of 111, we saw a big rejection. This rejection sent the price into the area of the breakdown from the head and shoulder on the 4 hour. This head and shoulder has a technical target that is in confluence with the bottom of the range on the 4 hour RSI, which is that 17 RSI that is priced at around 95 to 96k. It's a moving target, of course. If we take longer to get there, this could meet with the price in the middle, so be aware of that. The setup that I'm currently thinking in my head is potentially seeing this 4 hour reclaiming the neckline of 106. This is a counter trade, of course. If you could get the price back above 106 and maybe heading into 110, where we have an area of open interest, which is 111, that could prove that the longs have completely spoiled the technical target of the shorts, in which case we could put on the table a rally into the high levels. We have at the moment resistance at 77 and at 84 with the global resistance on the 4 hour. So I am prepared for potentially seeing something like that, because I'm already running along. If we get to those levels, magnificent. If we don't and we go for the actual technical target, if things really play out technically in here, we could be seeing the price accelerating into 96. There are plenty of elements that are supporting the idea of taking down the previous low of 102. We are here. We are already challenging the 103.4. So it seems that price came this low to potentially target a new low, being below 110. 102, that's what I mean. But now we are right at daily support. So that daily support, together with reclaiming the neckline on the 4 hour, could be the bullish case. The bearish is if we lose the daily here and the 4 hour does not manage to reclaim the neckline. For that, we have plenty of targets that we need to cover. On the daily, we have that 26.52, which is currently located also at around 96. That 96 is appearing everywhere, not just in the short-term liquidity pools, also in the long-term one. Is our first out of 5 levels that we need to handle in case we enter a bear market. We have 95, 85, 74, 68, and that 48k. Those are the 5 levels that we need to handle in case we enter a bear market. In the past bear market, we didn't go that low that fast. We did a correction in here that could be in line with 70 or 80, and then a dead cat bounce. So that's something that we need to be also prepared for. Now on the monthly and on the weekly, we have a bunch of elements that are very, very concerning. Like we are testing the 50 weekly, we lost support on the weekly as well. We are testing weekly support on the RSI, and we lost the level of 108 on the weekly. On the monthly, we are accelerating below the areas of support that the cycle wouldn't really forgive. We didn't forgive here, neither there, and the best thing that we had 1 out of 3 was a dead cat bounce in here and then straight into bear market. So do not take for granted that dead cat bounce that gives you a new all-time high like we did in 2021, but let's average down in case we do something that we have never done before. Thanks so much for watching this summary. If you want to be part of these summaries, you can subscribe YouTube membership, or you can get any tier on my Patreon community. I'll see you on the next one. Bye bye.